Welcome to today's video. Let's talk about checking accounts, how they work, what they are used for, and more. How do checking and savings accounts work? A checking account is a bank account for everyday expenses. You can use it to pay bills, make purchases, and more. Checking accounts are used for day-to-day cash deposits and withdrawals. They are offered by banks and credit unions, and you can access your money with a debit card, through online transfers, or by writing checks. What is a checking account used for? Checking accounts are all-purpose places to keep money for short to medium-term financial needs. Your employer can directly deposit your paychecks in the account. You can link it to payment apps like Venmo and PayPal. You can make wire transfers and mobile check deposits. You can pay bills from it, and more. Checking accounts are a building block to manage your money and make financial tasks easier. What's the difference between a checking account and a savings account? Checking accounts typically come with personal checks and a debit or ATM card. Savings accounts are not meant to be used for daily payments, so they don't come with debit cards or check writing abilities. Though you can use checking accounts for check writing, you'll probably use a debit or ATM card to access the money in your account more often. Checking accounts tend to have lower interest rates than savings accounts. Savings and money market accounts typically have higher interest rates. Certain providers, typically online-only financial institutions, offer checking accounts with higher interest rates than checking accounts at brick-and-mortar banks. How to choose a checking account? Here are some features to consider before opening a new checking account. Look for low or no fees and a low or no minimum balance. The best checking accounts don't charge fees or require high minimum balances. Check for a broad ATM network. If you anticipate that you'll need to deposit and withdraw cash on a regular basis, you'll want to look for an account at an institution that has a network of ATMs that you can access. See if the account has an interest rate. Most checking accounts have low or no interest, but you may find an account that offers a good rate. Look for sign-up bonuses. Some providers will give you money for opening an account with them. You shouldn't pick an account based solely on a promotion, but it could help you decide between two otherwise comparable options. However, note that bonuses are taxable, and that you may need to meet certain requirements to qualify for a bonus. Consider credit unions, online banks, and non-bank financial service providers as well. These institutions can have certain advantages that traditional brick-and-mortar banks might not. Online providers tend to have low or no fees, high interest rates, and user-friendly mobile banking capabilities. Credit unions often focus on providing good customer service and higher interest rates than traditional banks. Checking account services. Direct deposit. Direct deposit allows a company, such as your employer, to electronically deposit money like your paycheck into your bank account. The funds are then immediately available to you. Banks also benefit from direct deposits because it gives them a steady flow of income to then use to lend to other customers. So many banks will provide benefits like free checking if you set up direct deposit for your account. Wire transfer. A wire transfer is an electronic funds transfer that moves money from one account directly into another account. It allows money to be moved securely without the need to exchange cash. ATMs. ATMs allow you to access cash anytime. They are machines located at branches or in other public locations such as malls, airports, or convenience stores. Make sure you fully understand the fees your bank charges for using ATMs that are out of their network. Debit cards. Debit cards provide a convenient way to make purchases. They are often accepted as a form of payment where credit cards are accepted. Debit cards draw from the funds in your bank account and not on a line of credit, so you will not be charged interest on purchases. You can also use a debit card at an ATM to withdraw cash. Many banks offer zero liability fraud protection for debit cards to help protect against identity theft if a card is lost or stolen. Checking accounts and credit scores. Most basic checking account activities, such as making deposits and withdrawals and writing checks, do not have an impact on your credit score. Unlike credit cards, closing checking accounts in good standing also will not affect your credit history. Overdrafts on checking accounts being overdrawn do not appear on your credit report if you repay the money you overspent. If you do not pay back a line of credit extended to you for an overdraft, your bank could send the items to collections, and that could negatively impact your credit score. Keep in mind that some banks do a soft inquiry, or pull, of your credit report to find out if you have a decent track record of handling money before they offer you a checking account. Soft pulls have no impact on your credit score, although they may appear on your credit report. How an overdraft may impact your credit. There is one instance in which an overdraft can hurt your credit, if it's sent to collections. If you pay the fees and negative balance after an overdraft, you'll be fine. But if you don't pay back what you owe, the financial institution can send that debt to collections. Once a collection agency creates an account for you, it can go on your credit report. Anytime an account goes to collections, no matter how big or small, it's indicated on your credit report as a delinquency, and will stay there for 7 years. So make sure to pay back the overdrawn balance and fees as soon as possible to avoid this scenario. Thank you for your time. I hope you found valuable information. If so, please don't forget to subscribe.